Ladies and gentlemen, welcome to the Midday Market Monitor. In today's video, we're going to be covering the market, okay, everything. But we have Google and many of the other Mag 7 names having quite a massive sell-off here, and we're going to be talking about that. Meta still under $600 a share right now. Pretty crazy. Meta's down roughly 2%. Google's down roughly 2%. Nvidia, even though I thought that Jensen had an unbelievable conversation on the All In podcast the other day, this was a major podcast. It was not enough to help it in this type of market environment. The fears are in, the worries are here. People are not looking to invest in any AI names, and that includes many of SMCI. This is a little bit of a different story, but down 28.5%. The co-founder of the business is arrested. He faces 30 years in federal prison for hair drying the, what do you call it? Product serial numbers off of some of their racks and then shipping them over to China while also creating fake racks to, what do you call it? Like confuse or what's the word? Helping create fake things for auditors. I can't. My words are not coming to my mouth right now, which is not great for the show as of today. That being said, chances of a recession right now rising. Misleading to try to mislead auditors. Thank you. Obfuscate. Yes, thank you. You guys are the best. They created decoys. Deceive. Decept? Is that a word? U.S. recession odds, according to Polymarket, now at 36%. According to Morgan Stanley, they're less than 30%. And in fact, we're going to listen to a video from Morgan Stanley here in a second. Lisa, is it Chalette, ends up putting up quite a good argument as to why people should continue to be bullish in spaces like Mag 7s, select software names, healthcare, financials. This is quite interesting. She actually put up an argument to say, well, of course, with the potential rate hike environment, it's not great for financials, but there is a lot of deregulations in banks, especially for globally systemic important banks or GSIBs, that there could be a lot of freed up capital among some of the big banks, the JP Morgans, the Bank of Americas, and these sort of ones. And if that ends up happening, regardless of a worrisome macro environment, there actually is so much additional capital that could make for increased earnings per share that the big banks end up doing well. Pretty interesting. Is SMCI bearish for Nvidia? No. And it honestly, it seemed like we have not seen Nvidia talk about SMCI in months, ever since the whole audit situation where the was it Ernst & Young ended up stepping away from SMCI. And then we had a whole bunch of people in the chat come and say how I was so wrong on this name for not liking SMCI. But whenever you get that feeling and you just feel like a company is just not operating the same way as their competitors, probably best to not pick them, even if there is a substantial opportunity. Now, after 28% down, does this company either get acquired or cleaned up in some sort of way? New management? There's a possibility 16 times trailing PE might actually be an opportunity now. I'm not taking that bet, but I could actually see some people looking to enter into SMCI rather than anything. Tanner, are you or did you buy anything today? No, I've not purchased anything as of today. But I do own Meta. Love me some Meta. Love Micron right now. Yeah, I honestly, and you know what I'm starting to get interested in, even though there's massive sell-offs here, is the potential for some photonic names as well. I don't know if these will be as clean cut as the memory names, but it might be something to look into as well. Even here, as they sell off, One Stop Systems also down 9%. Air Test Systems down 7.7%. Hopefully, we can get Roy on soon to talk about this name. But I'm a believer that the AI trade is still very much in motion. And while, the macro might end up suggesting that we could go much lower and that there might be opportunity to take your chips off the table and enter in at lower prices, that's not the way that I usually play things. But I completely understand the people that are looking for that opportunity. It makes sense, but fear and greed here, where are we at right now? Fear and greed, we are at 17. Not looking good. I think we got to a low of 16 yesterday. Previous close was actually 17 as well. So we're holding that fear as well. And then an additional, QQQ is down 1.2%. SPY is also down that's the same exact thing I just shared on my screen. QQQ is down 1.2%. SPY down 0.8%. Pretty crazy. 652 on the SPY. 650 freaking 2. SMCI needs to be delisted. You know what's so funny? Andy Lunchbox. You know what's so funny about them being not just delisted? They are on the S&P 500, recently added S&P 500 name. They got in. Carvana got in. SoFi did not get in. So the names where I find like there is, they might be good businesses, but I think that they carry more red flags than a fully regulated bank. But maybe they have problems with fair value accounting. Maybe they're having problems with the dilution as well. So they're not being added to the SPY. S&P really broke the 200-day now. Oh my gosh. Oh my. Bullish Shark Ninja. They sell hair dryers. You're so right about that. Yeah. Where is Shark Ninja right now? Shark Ninja 100. I sold out of this name to get into more Nvidia and names like that. So we are not a holder of Shark Ninja, but we are a holder of most everything else. Yeah, but SoFi has fraud issues. Okay, Freddie, you tell me those fraud issues and then you let me know. If memory is cyclical, SMCI is also cyclical, and why would anyone buy SMCI for the memory names? Why would anyone buy SMCI for the memory names? I don't know what you mean. Do you mean instead of the memory names? Okay. Instead? Yeah, all right. Dude, I love that Vitsal and Haribo and all of these guys, new mods in the chat that have just been like extremely needed here on the channel lately. I love you guys so much. Thank you for being here. Okay. Canopy Growth Corporation down 8. Centrus Energy down 7. Where I'm pretty sure VG and Next and all these names are doing quite well. Am I correct? VG is up 9%, 1558. Next Decade up 4.3%, $7.60. ExxonMobil up 2.4%. AJG up 2.3%. Schrenier Energy up to 287, up 2%. Trade Desk back green after that insane report from what was it? Publicis? Publicus? crude is going for a run here as well. There's a video that I saw on CNBC that ended up popping up. I have not seen it yet, but said that we might, like, this might be the early stages of where we are going to see energy prices. Could be a little bit worrisome for some, maybe beneficial to others who are playing the space. Let's have a listen.
Crude trading around $110 a barrel. That's down from about $119 yesterday. Joining us on Energy Market Dynamics, Jason Bordow, founding director of Columbia University's Center on Global Energy Policy. Good morning to you.
Good morning.
We're all trying to understand what happens next, and so I'll just start there. What happens next, to the extent that you have any idea?
Well, it's hard to know because obviously it depends on what happens with this conflict. But I'm worried we haven't seen anything yet with energy prices. Yet. No, we're at $110 a barrel. We're unleashing every tool we have in the toolkit to the point where now we're trying to issue waivers and loosen sanctions on our adversary in this conflict to allow Iranian barrels to come to the market. That suggests we may be running out of good ideas. We've had the largest ever release of strategic stocks from the Strategic Petroleum Reserve. That's a drop in the bucket compared to the scale of this disruption, the largest we have ever seen. At some point, you actually need the price of oil to reflect the price that is needed to start to destroy demand. If you have a disruption of 12, 15 million barrels a day and the Strait of Hormuz remains closed, and Brent is not there yet. We're at 110.
Let's say, so the question is, let's say that the Strait opens in 2 weeks. I'm making this up. It seems unlikely, but let's say it happens. What happens to the price of oil?
Well, I think at that point the price will ease for sure, because people will see there's an end in sight, and obviously the futures market is a reflection of also expectations going forward. A big question, a big part of the answer to your question of what happens between now and then. For all of the increase in price and the fact that those barrels have been lost to the market, we have yet to see meaningful physical damage to most of the oil infrastructure. We started to see signals and worries about that with the attack on the Qatari natural gas facility yesterday. So the ability to bring that supply back to market can happen still somewhat quickly.
What happened to the whole storage story? Remember, there was this whole story 2 weeks ago. Oh, we're going to run out. They're going to be pumping. They're going to run out of storage. Then they're going to have to stop pumping, and then the whole thing gets into a real problem.
And we've seen some of that. We've seen something like 7 or 8 million barrels a day of production that has been shut in because they are running out of storage and they can't access the market in places like Iraq and elsewhere. Depending on how old the fields are, that can come back to market in a couple of weeks, maybe sooner in some other countries, but not months or years. And that's the time frame if you start to see real attacks on the infrastructure.
Do you believe that from what you know about the Strait, that you can actually control the Strait without boots on the ground?
It seems incredibly hard to see how that happens. It is not that difficult for a drone or a small dinghy boat to attack a tanker, and you don't need to get them all. You just need to get one, and before this conflict started, there were more than 100 going through a day. So we're seeing real questions about whether that's possible, and you need to not just say you can do it, but actually give confidence and allow insurance to be reactivated for tankers to start going through.
In the Obama administration, what was your duty in the Obama administration? Was it energy related? Did you?
I was the energy advisor at the National Security Council.
Okay, so you formulated some energy policy.
And was involved in things like the Strategic Petroleum Reserve release during the Libyan civil war.
So I'm just trying to understand the timing of all this. Even if you open it, I don't know what open means. That's the other thing. Do you think you could get a couple of boats through? And by the way, it sounds like there are occasionally Chinese oil is somehow getting through, right? So how's that working?
Well, I mean, Iran is determining what goes through and what doesn't. So Iranian oil is flowing through the Strait, and we're starting to see signals that some partners of Iran, like India and China, are trying to work out bilateral arrangements to start to send some oil through. But the volumes are still modest. The largest supply of oil has been what Saudi Arabia has been able to do to reroute by pipeline supply from the Strait of Hormuz to the Red Sea.
You quoted Brent, and it's not 109, but we do WTI usually here. Do you at least think the United States is in a better position than we were, for example, in the Obama administration?
Dude, the coughs are killing me. I'm trying to listen. Oh my gosh. Just like 30 more seconds here.
Because of all of the domestic production that's been increased in recent years.
Yeah, the huge increase in U.S. production. I mean, it's been a stunning turnaround from importing 60% of our oil 20 years ago to a net exporter of 3 to 4 million barrels a day.
It could be much worse, probably.
That's a huge additional increment of supply that's made the market conditions a little bit looser. But we're still discovering today that regardless of how much we produce, we are deeply worried about the impact to consumers and to the economy of the global oil shock. That's different than natural gas. The U.S. gas price is insulated and disconnected from the world. If the price for oil is set in the global market, we're still going to feel pain at the pump, whether we import or export.
It will always be said. People are asking that. Why, it's cheaper here. Why are we paying? But it's a global commodity, obviously. That's where the price is set.
SoFi, surprisingly, I saw some comments about this, is actually green. However, we're starting to see some red candles potentially bring it back down. I also saw some comments referring to a triple witching. I thought it was a quad witching as well, if I'm not mistaken, which can put a lot of volatility on a day like today, which, can clear up a lot on Monday. I forget how often it is. I think there's a quad witching 4 times this year. This being the first, March 20th. You can look up when that all falls under. But yeah. Oh my gosh, buy something, guys. I'm freaking out, man. I actually stay pretty calm during these types of days. But I'm not buying anything and everything that's on sale. I'm really trying to focus on what I think will be the biggest winners. Maybe that is SoFi. I mean, we ended up seeing some pretty cool news here that it looks like SoFi is looking to get some entities in Canada. I know that I'm pretty sure they also have the domain, which is SoFi.ca, which is the domain here in Canada. Could be interesting if that ends up coming into fruition, that I can actually create a bank here in SoFi. I would move, assuming that it is a similar product to what you guys have there in America. I know that, whenever you see a lot of companies go international, they usually start off small with single product offerings or, try to offer it slowly. Robinhood in the UK is not nearly as built out as what it is in the United States, but it's a start. It's a dang start. Google has privately started testing a Gemini app for Mac, moving closer to a dedicated desktop client. That could be quite interesting. And then Sundar Pichai also tweeted out that Google is now the first cloud provider to integrate 1 gigawatt of flexible demand into a long-term utility contracts. Our ability to shift or reduce our energy demand when it's needed can help utility companies balance supply and demand and plan for future capacity needs. This is a big milestone for responsible data center growth and helps keep costs lower for local communities. Obviously, that builds well into what Trump had also been talking about, where a lot of these data center businesses are going to have to find their own way. And Google trying to make steps in the right direction is, warranted. Okay. There was a pretty interesting podcast, like I said earlier, from Jensen Huang on the All In podcast. There were a lot of very interesting things that they talked about. Jensen Huang ended up talking about how, well, one, data centers in space going to be a very real thing. It's going to take a bit, but they're going to be real. What was it? That he actually believes that all these AI agents are not going to hinder software companies. They're going to change software companies. They are going to adjust, but that it's going to make them much better, and that there's going to be like a value-added services of reselling tokens of Anthropic or OpenAI and specializing tools based on the services that these software companies are selling. And then, in fact, we'll probably end up driving even more job demand, because the example that they gave is like a chauffeur for someone picking up an executive or something like this would maybe not drive the car, but during the entire time he can set up a bunch of additional services to make sure that you have a very specialized service, make sure that they're stopping at the right coffee shop, whatever, getting your bags to the hotel, like whatever the service is, but not that it would just replace the chauffeur and you get picked up by an empty, black SUV or something like this. Who knows? Who knows what's going to happen? But obviously, there's going to be a lot of. Have you checked how fast tokens SoFi USD grows? I've not seen a single real transaction on SoFi USD yet. We've seen some test things, and last time I checked, they got up to like $10 million worth, and then they immediately burned that away. So we'll see. I can check it right now. We're at 40 million now. Interesting. Okay, we have $40 million on SoFi USD now. Very cool. Very, very cool. Okay. Tanner, how are you not buying on these types of red days? I'm broke as a joke right now. I'm all stock, no cash. So I try to make money on the covered calls or whenever I, make money to put back into the accounts. But I've purchased all my dip buys. Like I got an additional share of not additional share, an additional stake in Micron recently. Ended up tripling my holdings after earnings. But yeah, like without question, I end up getting new money into the markets every week. But today I just don't have money. He bought the dip. The dip keeps dipping. Yeah, exactly. Exactly. If you had money, what would you be buying? Everything that's in my portfolio. I obviously like the trade of Micron. I love Nvidia here. I love Nebius here. But like I'm fully focused on the AI trades right now. A lot of them are, and that's another thing too. I don't want to get into negative cash. Leverage is not the way that I want to do this because the sell-offs can last so much longer than people think is rational. I think that if you were looking at potential rate cuts and everything like this, you'd be like, oh, okay, well, everything's going to clear up and and now the potential talk of rate hikes, it's like, oh my gosh, this could be a lot longer in terms of total pain, but we'd have to see. Christopher Waller was actually on CNBC. I won't play the entire 14-minute long clip, but there was a section of that where he was talking about interest rate outlooks. Let's have a listen to this really quickly.
Time now for an exclusive interview with Fed Governor Waller, Christopher Waller. Let's get to Steve Leisman. Great time for this, Steve, in light of everything, I guess.
Yeah, in light of everything is a good way to put it, Joe. Thanks very much. We're here in Washington with Fed Governor Chris Waller. Governor, thanks for joining us this morning.
Well, thanks, Steve. Great to be back.
Well, let's talk about the idea of the main stories out there, which is the higher oil price. And you were a couple weeks ago not that concerned. Has your views changed given what's happened with the Strait of Hormuz and what's happening in the war in Iran?
Yeah. So 2 weeks ago, when the jobs report came out and it was negative 92,000, I thought that's it. I'm dissenting. I'm supporting a rate cut. Because at that time, exactly, it looked to me like this was going to be a very short-lived spike in oil, no inflation issues, look through it. Since that time, the Strait of Hormuz was closed. This is looking like it's going to be a much more protracted conflict and oil prices are going to stay high for a longer time. So that suggested inflation was more of a concern than I was putting it. The second piece of information that came out, and Chair Powell talked about this a bit on the press conference, was that we've seen a lot of research recently that suggests that this year labor force growth is going to be zero or close to zero. If that's the case, then you don't need any, zero is the break even for net new jobs.
The unemployment rate not to change.
Yeah, exactly. And then for the last 3 months, it's averaged right around zero. So I'm kind of in this kind of odd spot where like my brain understands the math, but I can't get through my gut that this is okay.
Right.
So that was kind of one of the things that
just to emphasize that, what you're saying is a 0 doesn't seem like it's enough, but you're saying the math suggests it is enough to keep the unemployment rate.
Yeah,
unchanged.
I've been doing this for 45 years as an economist, and if you told me 0 was normal, I'd say you got to be out of your mind.
And you'd be saying the Fed needs to respond to that.
Fed needs to respond
in the job market.
I mean, the idea we'd get a minus 92,000 and the Fed would go,
right,
whatever, your head would explode.
So let's talk about your general framework for thinking through a rise in the price of oil and what that would mean for policy. How much concern do you have that it bleeds into the core?
Well, that's the issue. If it's a very high level and it stays high for months on end, then at some point it bleeds through because oil is an input into so many products. This is very different than, say, a tariff on toys. You put a tariff on toys, it doesn't bleed through into all the other goods in the economy. But oil is a major intermediate import, and it will at some point bleed through. And that's where you worry about high and persistent oil shocks. It's not like a transitory goes up and then comes right back down.
What does the history tell you about what the Fed did right and what it did wrong? Obviously, Bernanke in 1986 wrote a paper that said the Fed over-responded from the 70s and the 80s and made the recession worse. At the same time, you just through a period of time here where you sort of ignored what you thought was a transitory increase in prices, and you ended up with higher and persistent inflation.
Yeah, I mean, that's just, in the 70s, people forget it wasn't a one-time oil shock. It was a sequence of oil shocks. So, if you get a bunch of one-off things, it starts looking permanent. It doesn't look like a temporary, just a few one-off things. But in responding to all that in the 70s, everybody kind of realized that maybe this was a mistake and you have to look through this stuff. And that became pretty much central bank wisdom from the 80s on, is these kind of oil price things, they go up, they come back down, you don't respond to them. I always want to point out that something where the oil goes up and then it comes down is very different than oil goes up and then stays there for a long time. That's where you get back to this issue where it bleeds through back into core inflation. And then you do have to kind of respond. You can't just look through it. So that's one of the critical things that I started thinking about. This inflation problem may be worse than I think it is if this continues. Now we'll wait and see. We don't know where this is going to go, but we have to sort of think maybe caution is warranted. And it brings me back to one of the last points I wanted to make. In March of 22, before we were going to lift off the zero lower bound in March of 22, and I had been advocating that we should go off by 50. Get off, immediately raise rates by 50 basis points. After that, Russia invades Ukraine. And everybody it's kind of the same boat as here. Caution is warranted. So don't do anything right now. And that's the same approach I took this time. It doesn't mean that I'm going to stay put for the rest of the year. I just want to wait and see where this goes. And if things go reasonably well and the labor market continues to be weak, I would start advocating again for cutting the policy rate later this year.
Walk me through the horizon of different policy outcomes that you think. Chair acknowledged that there was a discussion at the meeting of rate hikes. Where do you stand on that possibility?
Well, I think if people are worried, I'm not speaking for any of my colleagues, I'm just laying out some theoretical points. If you think inflation, say in December of 2024 was, headline PC was 2.8. It's 2.8 roughly now. So there's like no change in inflation in all that time. And if you're worried about it going up from here, then there's a sense in which people say, look, we've got to raise rates to get inflation back down and under control. I have taken the view that if it was 2.8 in December of 24 and 2.8 now, it's not structural. Because if it was structural and you believe tariffs were being passed through by 50 to 100 basis points, then inflation should be running 3.5 to 4, not 2.8. So if tariffs had any pass-through effect, then structural had to come down to maintain 2.8.
I hope people get that math. It's pretty interesting, right?
We are making progress.
You
on
added
underlying.
a half to 1 from tariffs.
Yep.
You had 2.8. You are 2.8. So therefore, it should be 3.5.
Something
4
had to go down
in there. So it didn't go down. So you think that the structural inflation rate is probably more like 2 right now.
It's getting closer to 2. That's why I think once you get past the tariffs and maybe the second quarter, you're going to see inflation come back down. For just this reason, once the tariff effects wash through, then all that's left is whatever structural change. Now, if you think it's going to go bouncing way back up, but I don't think there's a need for rate hikes because of this kind of math argument I was just giving you, that we're not seeing any progress. But that's because tariffs are pushing it up while structural stuff is bringing it down, and on net it stays the same.
You and I have
Interesting. I put up a poll on screen for anyone that is listening audibly. I'm curious to know your take. Where will we end this year on interest rates? So assuming that we had just passed the December FOMC, are we going to see at least one rate cut this year, no rate changes at all, or rate hikes of at least one rate hike? Meaning it would push us into the 375 to 400 bit mark rather than the 350, 375 bit mark where we are right now. Okay. Nvidia loses 175. Oh gosh. We falling further. Let's have a look at the markets today. Qs are pushing lower now, down 1.38%, 584 on the Qs. The SPY is down 0.9. Nvidia 174. Micron, we're down almost 5% on Micron, 422. The trailing PE is 19.9 times. 19.9 times on a trailing basis for a company that's getting long-term agreements with chip manufacturers, and which allows them to essentially have steady state pricing. And not only that, like we've never seen that before for Micron, which essentially could point to a multi-year change in that sort of boom bust cycle because, well, they're getting those agreements. They said that they got one already and they're in talks with many more. Guys, I don't know. It seems like one of the greatest sell-offs for an amazing stock. Yeah. I shorted Micron and shorting Nvidia. You shorted Micron? I thought you said you bought Micron. You change your mind too much. Dookie, I need you to be a long-term bull. We need this type of help. Down 5. Okay, Iranian officials have become reluctant to even discuss reopening the Strait of Hormuz as they focus on surviving U.S.-Israeli attacks. That's so crazy, man. That's so crazy because a single drone, like they said, like you can almost essentially attack every single remaining building around the strait. But if there are, a single drone that could hit an oil tanker, it's like, this is not good. Nice to see you back on air. Thank you, brother. Appreciate the 10. I shorted it on earnings, then bought back some for long term. Got you. Okay. So yeah, Micron is down. Even Nebius down 5% today. This is a quad witching day, so it's no one was ever expecting this to be a very bullish day. So keep that in mind. Perplexity Computer can now connect to market research data from PitchBook, Statistica, and CB Insights. Everything that a VC and PE firm has to enjoy, that has access to enjoy. Ooh. I know there was another report from Perplexity that essentially said you can put in like any PDF and use artificial intelligence to edit them live in Perplexity Computer. I was like, oh my gosh, this is going to help. This is the thing where I have such a hard time being bearish because like all the new AI tools and everything are so unbelievably real. And just like Jensen said, this is This is a really, really unique idea. Let me try to bring this up. He talked about paying a $500,000 engineer and said, if they are not, actually, maybe I should let him say it. But just talking about their token spend. Let's see here. Okay, here, let's listen to this. This was Jensen on the All In podcast.
We're trying to, let me give you the thought experiment. Let's say you have a software engineer or AI researcher and you pay them $500,000 a year. We do that all the time. Okay, this is happening all of the time. That $500,000 engineer at the end of the year, I'm going to ask them how much did you spend in tokens? And that person said $5,000. I will go ape something else.
Yes.
Right. If that $500,000 engineer did not consume at least $250,000 worth of tokens, I am going to be deeply alarmed. Okay, and this is no different than one of our chip designers who says, "Guess what? I'm just going to use paper and pencil. I don't think I'm going to need any CAD tools."
Right. And this is a real paradigm shift to start thinking about these all-star employees.
How crazy is that? But it's not about the spend, right? Like the whole idea that you can even afford a $500,000 engineer is because of what you get out on the other side of that. And so the reason why he wants you to spend $250,000 is not so that he can increase his expenses. It's so that he can increase the top line growth and end up paying for that tokens because he believes that the output of the tokens are profitable. And the funny thing is that the direction that artificial intelligence is going is it only gets more profitable, at least in terms of the utility that these tokens can end up doing. And then he also talked about a new use case for selling CPUs as well, the sort of standalone standalone Vera chips, which I was talking about, Steve, with this. And where is it? Here, let me see if I can find where he said this. I'm trying to go through the transcript. Where did he say this? Where he's talking about Intel and the Vera chips doing 25 billion. Okay, there it was. Let's listen to Jensen here on the podcast. Shout out to All In.
Somebody who made an observation recently that NVIDIA, Jensen, how can you be larger than Intel in servers? And the reason for that is because the CPU market of the entire data center was about $25 billion a year.
Right.
We do $25 billion a year, as you guys know, in the time that we were sitting here. And so obviously, that was a joke.
No, it's
All In podcast.
It's roughly true.
Don't worry, everything on the show is roughly
God,
true.
don't worry about it. It's all in.
Wow.
You can here.
Okay.
I mean,
Anyways, that was not guidance. But anyhow, the point is how big you can be depends on what is it that you make.
Right.
NVIDIA is not making chips. Number one, making chips does not help you solve the AI infrastructure problem anymore. It's too complicated.
And I bet you they did sell $25 billion while they were talking, because there's a whole GTC is not about, hey, let's have a massive expense so everyone can come in and we can talk where we could do a live stream. No, there's a lot of buyers, a lot of developers, a lot of companies that end up walking around and signing massive deals, all centered around NVIDIA. So he had to say that was not guidance, and he didn't realize where he had to realize he was not sitting around with the boys there for a second. He was like, okay, wait, this is, I'm essentially speaking for NVIDIA right now. It was a joke, but I don't think he was joking. But yeah, like I can't get over how much I love NVIDIA, how much I love the AI trade, what you'll be able to do with artificial intelligence. Jeff Bezos just recently said this as well, that where was that video where he's talking about this? Ooh, that's another great one. I might get not canceled, but there is a background music talking about this, so I don't know if I can play this. But essentially, he said that all they're doing at all his work is doing at Amazon is artificial intelligence. Okay. And that AI is going to be doing essentially everything. It's going to be a foundational layer across every single service, and it's going to be making everything more efficient. Okay. I guarantee you that there is not a single application that you can think of that is not going to be made better by artificial intelligence. And we're at the top. All right. Jeff Bezos equals robot. Well, you know what? He just raised, or in the midst of raising $100 billion to help with manufacturing companies to use artificial intelligence to automate those, new manufacturing plants. And then also they added this photo of Jeff Bezos. He looking healthy. He looks like a different man here. This guy says, FAI. You, sir, are being brainwashed by people that have scared you out of thinking that your job is going to be taken by a robot. People with no thinking process or have any creative ability will be replaced by artificial intelligence. Okay? Your job will be fine if you use artificial intelligence to help deliver a 10x product. But if your job is to be a drone, you will be replaced by a drone. If you go to work and you act like a worker bee or some sort of robot, then a robot will replace you. That's the way that you should think about artificial intelligence. But it's not scary. And there's this crazy push right now. And honestly, I think like there could be something behind this where I think like there's some level of propaganda that's like coming in to scare people into thinking that AI is a bad thing. I'm not brainwashed. I just see how humanity is getting more stupid by the day, and AI will make it worse. It's so not true. It's so not true. That's the whole idea of like, oh, these kids these days don't even know how to do cursive. These kids these days don't even know how to weave baskets or something like this. Like, yeah, because we don't need to anymore. Like, you type with 2 fingers like this. You're the one falling behind. The kids know how to do the skills of today very well. You know, they're not falling behind. They just don't have the same problems as you, so they're not learning the same skill set as you. Chamath, well, I understand people call him Skimoth or whatever, but I'm not here to sell you anything that he's doing. But at his company, 8090, you literally see this high school kid, this young man who, and actually the whole room looks like a fleet of, young individuals who are helping because they learned extremely early that artificial intelligence is not a matter of like they're almost like entry-level jobs. If you start thinking in the way of artificial intelligence, it's actually much better to know how to prompt them than trying to put your old ways of working into artificial intelligence. So you see this individual here, this individual, that guy looks pretty young. Like, it's a bunch of young guys, and they're making unbelievable software. Let me see one mow a lawn, Tanner. I mean, brother, there's what's that company's name? Steel? STIHL. How do you pronounce that name? There's definitely robots that cut grass. I mean, that's not even a hard task. I agree with you, Tanner, but at the same time, there are way too many Zoomers who can't drive. They want one. I don't even think that's true. But they don't have the same need to drive. Back in the day, you couldn't just call up a car to your exact location at the cost that you have to today. And most of them do drive. I don't even think that's true. But like shovel snow, same thing. There's robots that shovel snow. We showed them off in a stream about a month ago. Okay. In an apocalypse, they're cooked. Okay. Miri. You guys can, stay doomeristic, but I don't know if there's a time in history where that's ever worked out well. Optimism usually pays unbelievable dividends. The idea of, continuing to invest in the companies that are obviously and so clearly growing extremely fast, taking real profits, growing, solving real problems. Yeah. Thomas says being pessimistic on NFTs was a correct choice. Even then, I think you're wrong. So the idea that a rock or something like this, there was no problem being solved there, but the technology of having a one-of-one digital signature on something is being used all the time. Like cryptography is real for security all of the time. So the idea that there's online documents or something like this, like we are using crypto for them constantly. We just don't call them NFTs because, that's been something that's been super hated on. But the actual technology for NFTs is being used constantly. And in crypto and all this stuff, everyone said that it was going to die. And now you have BlackRock and Amundi and all of these large asset managers, and S&P Global just announced that, New York Stock Exchange just announced, and NASDAQ just announced that they're going to allow for tokenization of securities. The whole idea of like calling for a technology's death and then like making the assertion that like it's early enough to call that NFTs will not be back, I think is false. Not to buy a picture of a rock. That was a joke. Like that, but it's like back in the internet, like early 2000s, early 2000s, there was a wide range of things that were Wild West activities. The Icon has cheeseburger type, .coms that were out there. And then there were also Google and Amazon and real projects. And those real projects are now the most profitable companies in the entire world. There was a long time where ExxonMobil was the most valued company in America. It's no longer the case. It's all tech companies. And in years from now, the top 10 companies in the world, the magnificent 10 or 7 of the future will be all AI companies. And there will be a lot of crap. There'll be a lot of crap. But they will be the realest companies going forward. Let's see your NFT then. That literally makes no sense. You don't even know what an NFT is. And by the way, I never held a single art form of an NFT or anything like this. So I was not sucked into the trade. I was not a part of any of that. I never, ever believed in it. But the idea of having a signature that proves that something is one of one, like so clearly you can think of reasons why that would be useful. Property deeds, like insurance policies, all that stuff. It's definitely real. Yeah, cough up that NFT, tough guy. We know you have it. Hand it over. Hand it over. Let's listen to Morgan Stanley, who says that the chance of a recession is still less than 30%, even though that's not what Polymarket's putting it at right now. Okay.
In the meantime, let's bring in Morgan Stanley Wealth Management Chief Investment Officer, Lisa Shallett. Lisa, what a pleasure. It's good to have you back again.
Always nice to see you, Carl.
We were talking about sort of the, some argue, moderate levels that we've come off the highs. You argue that this sort of FOMO, buy the dip, every crisis is an opportunity, is dangerous thinking?
Well, ultimately, we know at some point one of these drawdowns is going to result in a bear market. Our last bear market wasn't that long ago; it was in 2022, when we know we had kind of a profits recession. And so, our perspective is that right now the data is starting to slowly build that creates some headwinds. Now, our view and the potential for an actual recession or an actual bear market that goes with it is still less than 30%. But we do think that folks need to take some of the macro developments seriously. I mean, the backup in rates, the flattening of the yield curve, these are serious things. I know at the top of the hour you were talking about the pivot in global central banks. I mean, this has been extraordinarily provocative. I mean, think about it. The largest 6 global central banks, including the Fed, as recently as February 27th, we're looking at a cumulative set of rate cuts for this year of almost 600 basis points. We're now looking at curves for those same 6 central banks where, we could see hikes of as much as 500 basis points. So this is a radical repricing in global bond markets. And that matters a lot to global cost of capital, to multiples, and to companies.
I get it. I mean, on the company front, though, I mean, not that they've had a lot of opportunity to come to the mic, but we're not hearing corporates, guide much lower in some cases, they're guiding higher. FedEx is a great example today.
Yeah, no, 100%, Carl. We're looking at the same data that you are, and we've been quite surprised that the earnings revisions momentum has held up here, and that analysts bottoms up are still taking those numbers up. We do fundamentally think that as the war drags on, there are going to be some of these supply chain pressures that have to just drift into and bleed into first probably margin expectations, and then potentially, if this drags on a lot, to demand destruction and a more stagflationary type outlook.
Yeah, but before the war began, it was all AI, and where's the AI disruption, and how at risk is software, and then private credit that is lent to software. I mean, where do you think we end up on the other side of this war on that?
So on some of the controversies that kind of animated the first 2 months of the year, I think that a lot of that market action underneath the surface created huge amounts of dispersion, some of it not entirely logical. So we're looking at some of the spreads between semiconductors being so highly valued and software being shunned, and memory stocks being bid up and hyperscalers being sold. We think some of those extreme trades are really going to reverse themselves. So we're seeing opportunities both long and short in this market.
And finally, really quick, we just were talking financials. That's also one of your buckets of opportunity?
Absolutely. I mean, I think one of the things that folks are not really incorporating into their forecasts quite yet, and I'm not sure, that even Goldman CEO gave it full shrift. But the globally systematically important banks, the capital markets banks, are looking at significant regulatory reform towards the end of the year. Our best guess is between changes to Basel Endgame, GSIB surcharges, you could see excess capital in these banks rising to $250, $275 billion that can be put to work in terms of share repurchases, additional deal underwriting, as well as just direct lending.
Yeah, well, we did get those new rules yesterday. Bowman commented on them again this morning. Lisa, look forward to having you back soon. Talk about some additional playbooks. Thanks so much.
Great.
I like the idea of, if I can drag this back, select software names. Obviously, she's stating they're not all going to survive, that's for sure. But there will be names that survive, and maybe that's the ServiceNows or the Salesforces of the world. We'll have to see. Meg 7's very interesting. However, she did make a shot at shorting some of the, not those names, but in the actual manufacturing side, like, for example, memory. And then on the financials, the GSIB banks, the JP Morgans and the Bank of Americas, because the deregulation is going to actually help them make so much more money, even in the face of a poor macro. I think that's pretty good, or a pretty interesting idea to think about. But yeah, I remain optimistic. Buy some Visa. Visa will probably be around a long time. How do you guys say? Do you guys say Visa? Because I heard Brian Armstrong say the name, that company's name, and I realized that I was pronouncing it and still pronouncing it wrong. I don't know if it is Visa. I think it's Visa, but I don't say Visa. It's Visa. It's not spelled that way. Yeah, I say Visa. Buy Accelera, it's Canadian. Not really in my wheelhouse, but yeah. D-Local is a mini-scale Visa MasterCard. Ooh, I would heavily disagree. The great thing about Visa and MasterCard is that they have network effects. You know? Well, I think that D-Local is great. To compare that, like, they're more of like an Adyen or something like this. No one even knows that they're using them. Very different than the actual payment networks. Are you going to add to Micron? I'm going to continue to add to Micron as probably one of the bigger buys right now in the short term. Next week, if it stays at these prices, or if I could even get better pricing, but this is quad witching, so I wouldn't necessarily think of this as a trend. Obviously, it can continue to fall, but today is a special day of a little bit of uncertainty in the markets. Yeah. Actually, I just bought some Visa under $2.99. Could be a good buy. What do you think of American Express? I don't really, honestly. I don't think about them enough. I don't follow Mastercard, Visa, and Amex as much as I should. I think the older you get, you realize just how impenetrable those businesses are. And you realize, like, okay, they might not be as flashy as fun names like crypto or AI or even a lot of the software names, but they just have such unbelievably high margins and no competition. And yeah, it's just crazy. Even in the face of a lot of stablecoin changes and everything, they've just adapted to stablecoins. They're just integrating them very well. I don't look at SpaceX or Rocket Lab, to be honest. Tesla is very interesting. I think it's one of those things of, well, the reason why I'm not in Tesla right now is I do believe in the mission, but I don't know how much margin of safety there is. Obviously, if he gets to $8 trillion plus, like, it'll pay for itself however many X fold. But the only way you get there is if you believe his outlook for robots and artificial intelligence and full self-driving and everything. And that's how you get to that $8.5 trillion market cap, in which Nvidia will do so unbelievably well. And then it's the valuation that I'm willing to pay today, like the margin of safety for those total addressable markets in the future. So I think, like, there's names like Nvidia that are such unbelievable, Google too, and Amazon are such unbelievable bets into an amazing future and will continue to do well. But I only have to pay 35 times trailing PE in order to get those names. Where Tesla, even at 370 here, is a 344 trailing PE. That's a 10x valuation on Nvidia. Now, if, like I said, he ends up getting that sort of let's call it like an Apple-esque closed system for robotics, full self-driving, the whole Tesla ecosystem, their own terafabs, lithium mining, like everything that Elon wants to do, and he gets that valuation, it'll pay very generously for the people that took that risk. But on the odd chance that it doesn't happen on his timeline, could be not dead money, but just underperforming some of the other Mag 7s that obviously have brilliant futures and really, really smart entrepreneurs as well. I think Jensen is up there at the Elon Musk-esque ability to capitalize on opportunity. Jensen and his greed will be the reason that humanity lost everything in 5 years. Think about the role that you play in humanity. You're the bear of humanity. You're the guy with the picket sign outside of Henry Ford's factory saying, like, why your horses are losing their stables. Times are changing, and that's all right. But you can't just say, like, because your portfolio is all in horse stocks that he's bad for humanity. Things change. At what levels would you pick up Nebius at? So I think, honestly, I think the purchase price today is pretty decent, but I think what you're saying is what's in a better, more optimistic or opportunistic price to get in. And I think that there's a possibility that we see sub 100 again in a bad macro, but it would have to be sooner rather than later, because if it's not sooner, then you're just going to have continuous growth that ends up pushing us farther away from those numbers. But you'll probably see under 100. Is your expectation that Nvidia reclaims 250 this year? Well, there's no reclaiming. They would just be claiming. But yeah, I hope that they get to 250 this year for sure. SL, I think the idea is one that we don't know yet. Like, I think a large part of American industry before were farmers and like agriculture. And now that's an extremely small part of the job market. And I think that job markets change very quickly in 2 to 3 year time periods. So I'm not sure that it's true that I think the way that people are looking at jobs is they're saying, okay, well, 90% of the time that I spend is doing the stuff that AI can do today. Well, okay, then they're not going to need me. But it's like, okay, well, what could you spend your time on? Like I'm hiring this guy named Marshall here in 9 days. Okay. First employee in the face of all of this artificial intelligence. You could say, Tanner, well, that's a terrible time to hire someone. All the things that he's coming in to do, edit videos, help with, setting up events, helping with, all the back end and everything like this. A lot of that's going to be automated by AI. But what's the total addressable market for, my business? Okay, maybe whenever he first gets in the role, editing will be a 3-hour part of his job. And then maybe afterwards it's 20 minutes. But does that mean I only need him for 20 minutes? No, I'm going to try to get out more videos, more shorts. Maybe I'll get into other things like that. Then we start talking about TAM expansion. If something he can get done instead of 3 hours turns into 20 minutes, well, how many 20-minute sessions do we have in an 8-hour period? We can do a lot more. And so I think that there's this, Vatsal said it to me one time, and now I forgot, but this, Vatsal, if you're in the chat, please, dude, you said this thing about the lump sum fallacy. I think that's what it was. Lump sum fallacy. The lump of labor's fallacy. In economics, the lump of labor fallacy is the misconception that there is a finite amount of work, a lump of labor, to be done within an economy which can be distributed to create more or fewer jobs. It is known as the lump of labor fallacy, the fallacy of labor scarcity, okay, blah, 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 blah. But this idea that there's so much work to be done and then that's it is just a misconception. If one person works more, that means another person must work less. It's not true. Economists generally consider this as a fallacy because the labor market is dynamic and can expand rather than being static, fixed / lump. Zero-sum thinking. I don't agree with it. I think economies will grow. And that's why Vitsal is a legend. Think about all the jobs that the internet created. Yeah. I'm not even remotely angry. I'm just having a chill day. Here, wait. I'm at a 1.2 on my stress monitor, which puts me in the low to mid terms of my heart rate and everything. I'm big chilling. It's not as chill as I thought I was going to be honest, but whatever. Where's the Qs? Down 1.5. Just another one of those days, quad witching day. Let's see what we have on CNBC here. Ooh, this is right up my alley. Let's have a listen to this. The future of finance, stable coins, crypto regulations, and the future of agentic finance. This is right up my alley.
Mastercard announced an acquisition of stablecoin infrastructure startup BVNK for up to $1.8 billion. It's the latest in mainstream finance's adoption of blockchain technology. Joining us right now is one of BVNK's backers, who's also betting on the growing link between blockchain and fintech. We haven't seen her in quite a while. Katie Hahn is here, founder and CEO of a $2.5 billion firm, Hahn Ventures. She's backed the likes of OpenAI, Anthropic, Coinbase, and so many others, including, as we just mentioned, BVNK. Good morning to you.
Good morning. It's good to see you again. I haven't been here since, I think, last June.
Oh, my goodness. So tell us about this deal, and then I really want to try to understand what you think is happening more broadly. Maybe this transaction is indicative of what's happening more broadly in sort of the convergence of legacy fin and the tech part of all of this.
Well, I think you just summed up well what's happening. What's happening is effectively an arms race in the global payment space. And you saw this week, as you said, Mastercard just acquired one of our portfolio companies, BVNK, for $1.8 billion. And this gets Mastercard squarely into the stablecoin space. By the way, Andrew, this was one of Mastercard's biggest acquisitions ever. And for us here, it's really validating because, as you know, I've been on this show many times talking about stablecoins over the years. We as a fund have been investing in it for years. And that's because we saw stables as a key innovation. I mean, you think you can transfer a digital dollar globally, instantly, anywhere in the world, really seamlessly and frictionlessly. And we think that's a really important innovation. And that's why you've seen incumbents, not just like Mastercard this week, get into stables. You also saw last year Stripe acquired another of our portfolio companies, Bridge, for $1 billion. Right. And I think it's easy to see why this space is $12.5 trillion of volume already. And we believe that this will only increase in an age of AI.
So it absolutely feels like it's going in that direction. The question that I would have about all of this is whether stablecoins ultimately become commodified. And maybe there's so much room between now and commodified that it doesn't matter as an investor. But I'm curious how you think about that, because if everybody has their own version of a stablecoin, what that ultimately means.
Right. Well, look, there are many currencies in the world, right? But then there are a few dominant currencies in the world. And we see the same thing playing out in the stablecoin space ultimately. And just because something is inevitable, I always say, doesn't make it imminent. But we really see with the rise of AI systems and things that I'll call agentic finance, we really see this trend continuing with stablecoins. These are fundamentally new rails, purpose-built for this new era in tech.
When you think about what's happening in crypto right now, in the blockchain, obviously this clarity bill that's not so cool. There's no clarity on clarity. What are you thinking ultimately happens between this massive fight between the crypto industry, and of course you were on the board of Coinbase, and the banking industry, which is what this is really all about?
Right. So actually, it's not true that there's no clarity. And let me tell you why. Just this week, I don't know if you saw, but the CFTC and the SEC came together to release joint interpretive guidance on the age-old question in the crypto industry, and that is that the courts were starting to weigh in on, and that is, what is the security and what is the commodity? So that happened this week, and I think a lot of people. We had Paul
Atkins on; he talked about it, but that right. we still don't have a bill. We still don't have real clarity on whether crypto firms can effectively offer either effectively the equivalent of interest or loyalty points or other kinds of things like that.
I'm hearing that there's a compromise in the works in the Senate Banking Committee, and I'm hearing that compromise is going to be announced as early as today. I'm cautiously optimistic. Obviously, we don't know for sure if that will happen. To me, the bigger question is not whether a compromise will be reached between the financial institutions, the banks, and the companies like Coinbase over rewards. And that is, for your viewers, by the way, whether or not essentially some form of yield can be paid on rewards on stablecoin deposits, which the banks have resisted, and I think is better for consumers. But to me, the big question on the Clarity Act is Congress going to get a bill to the floor on time to vote? Although there's still 7 months to go until midterm elections, the reality is there's only 3 working months that Congress has, if you can believe it. And so I think they need to move very deliberately after Easter recess to get this bill to the floor. But again, I'm cautiously optimistic, and we did have the Genius Act passed. But we'll wait and see. And we should have more news today on the compromise.
Thank you. Maybe you've broken the news right here. I hope you're right. Separately, and just to jump around to a lot of different topics.
I was cautiously optimistic, but yes, okay.
Well, we can cross our fingers. My question for you goes back to then AI. You have stakes in Anthropic and OpenAI. You also, by the way, used to work in government, and so I wanted to get your take on how you evaluate what is going on with this Pentagon situation, supply chain risk conversation, and the transaction that OpenAI has made with the Pentagon and the transaction that Anthropic has not.
Well, look, let's back up and just first talk about blockchain and AI and agentic finance. And I think we can all agree, and there are a lot of legal issues involved in that area as well. I think we can all agree that agents will be doing more things that humans do now. And one of the things that humans do now is they transact, and they make payments, and they exchange value with each other. And we think it's pretty inevitable that over time, computers are going, or more particularly agents, are going to be doing that on our behalf. And if you think that agents and computers are going to use the same payment systems that humans use, I think that's wrong over time. I think that agents are going to want to transact 24/7, instant settlement globally. And right now, if you think about how humans progressed from using checks to credit cards, and now actually not even credit cards as much as credit cards on their iPhone, we think that also agents will be using some of these new systems. So I think that's where AI comes in. And I should just note that our fund is not an investor in Anthropic or OpenAI. And I'm glad you listed that those were personal investments. Our fund is really focused at Han Ventures. We've been investing in the future of finance. And that new frontier, of course, includes crypto, but it also includes things like tokenization. I don't know if I'm sure you did break the news that NASDAQ, I think, got SEC approval to offer tokenized securities. Robinhood is leaning into this. So it includes tokenization, these new rails I've been talking about that are open 24/7, and things like agentic finance and prediction markets. So we could talk another time, I think, about all of the litigation. And I think there's a lot of it, and I think there's a lot more to come. And by the way, same with prediction markets. with all these new frontier technologies. And I think that's why my background as a government litigator is actually particularly relevant to some of these companies.
Gosh, I mean, there is pretty privilege in this world. I say it all the time, and you guys are like, no way, bro. Like, once you grow up, like you'll figure it out, or you're helpless in a apocalypse. Like, you guys have been through a lot of apocalypses yourselves. But whenever Katie says it, you guys are like, oh, well, I guess this is good for crypto. I've been saying, she's saying the same things I'm saying. But Brian Armstrong actually just posted about this. There's a new app called X402 Everything, which is just the protocol on ETH that is going to help with a lot of this agentic payments. And you can actually see in live time the amount of assumed payments a second for humans versus agentic payments. So right now it's extremely, extremely small. But that also makes for very interesting types of investments, as people know. Like, if you're a total addressable market investor and you want those growing TAMs, you want to pick something that is that you know is going to be huge, or you have high probability of being an extremely big market, but it starts out very small, right? Yeah. Pretty privilege doesn't move on everyone, or doesn't work on everyone. I was unmoved. Yeah, right. Yeah, the agentic payments, not gonna happen. I don't care, Katie. Wouldn't work on Amit either. Katie wouldn't be getting through to him. Unfazed. Okay, let's go ahead and check out what's working, what's not. Oh my gosh, you know what's not working? SMCI down 30%. 30%. Amit's mad about the public ad. I completely defend Amit here. What were they doing, man? I said this yesterday. I said they are putting up such a strong motion on crypto right now that they could never go back on it, because they continue to harp on this idea of, hey, we are your brokerage, not your bookie. Okay, but they just came out after this. Where did I not save the thing? They came out after this and said, well, we're probably going to get into prediction markets, but we're going to be selective about them. It's like, how's that any different? They literally made all this stuff like attacking Robinhood and then said, we're going to get into prediction markets. It's a matter of time. Like, it's inevitable. I actually think that was their wording, was prediction markets are inevitable. SMCI US treason. Yep. Not SMCI, but the co-founder, as well as some other employees and contractors that had helped them. I actually think it is treason, if I'm not mistaken. Because I think at the power that these extremely powerful servers are, they're essentially like digital weapons almost, or could be used that way. Okay. What if they find out that Nvidia knew about it? Then that would not be good. But they have already come out with a message saying that they absolutely had no idea about it, and they're, I would be shocked if that was the truth. But obviously, if it was the truth, then they need to be held accountable. SMCI has to add another bottom line for smuggling to the balance sheet. Yeah. In the income statement, they have treasonous activities, $2.5 or $2.6 billion of added gains in 2025. Not the way you should be making money these days. after Ernst & Young had a big fit about dropping out, and then all the people that came to their defense. Not looking great, down 30%. But now, the question is, does the company end up getting cleaned up? Maybe the board ends up taking over, getting good management, really trying to turn things around. Now you're taking a $12.8 billion company that is at a 15 times, trailing PE. Or do you sell off their assets for scraps and you... I don't know. My best thing to do is if it goes in the too hard bucket, you don't buy it. And SMCI goes in the too hard bucket for me. Too hard to know what's going to happen. Too many uncertainties. Too many red flags over and over. Even after the Ernst & Young thing, you could say, okay, they messed up. They got their slap on the wrist. They're not going to do it again. Boom, did it again. Yeah. Okay. QQQ's down 1.6%. This is quad witching day, ladies and gentlemen. Terrible. Bad stuff. What should we do if we're already holding SMCI? Well, I'm not sure. I think you're better guided your own, like, what made you buy it in the first place? Do you think that has changed now? Like, I don't know what was your thesis to begin with? Look at this candle on the Qs after dropping this amount. We're down 1.75%. Are we going to end this down a 2% day? Okay. Wow. Dude, everything changed. No one had fraud on the thesis. Of course, I mean after the fraud. If you exclude the $2.5 billion of earnings, if you're saying, hey, you know what, I believe in the AI trade, and yeah, I get what you're saying, but like, with a company, like if you think, okay, well, the added $2.6 billion or whatever in 2025 added, let's say 15% to the company, but now it's down 30%. You have to adjust the valuation to where we are today. So it's not the same. Of course there's fraud, but we're also seeing a 30% sell-off. Like, it's too late to sell before the 30% sell-off. So now we have to revisit where we are today. Did we bomb another oil refinery or something? Let's find out. This is from a while ago. Strait of Hormuz a while ago. Get up to $3,000 in stock when you open and fund a SoFi Invest self-directed account. They have tripled the rewards. They want people coming into their brokerage accounts. Wow. Not seeing any news yet. U.S. making preparations for potential ground troops in Iran. That's what it was. Ground troops in Iran. I think the people, I think there were two schools of thought. One, they were going to leave, mission not fulfilled, and walk away from the Iran business. Or two, they were going to put troops on the ground because they actually can't, like, you can't just secure the skies and have regime change. Tell the people to get on the ground and take back their own country. Well, the regime still has very powerful guns, tear gas and all the terrible things. And then the concerns of, okay, well, if you do get out there and riot, are you going to be hung or prosecuted based on this if it doesn't last? So it's a very scary situation. The relief of exiting a bad investment cannot be explained. Dude, it's a great feeling. I've done it before. Like, but it's also one of those things where they go, okay, if I've held SMCI, like, what should I do now? I'm like, brother, I don't want to give you the wrong. I don't know enough about SMCI. It's had red flags on it ever since I've first laid eyes on it. I did not like SMCI. Never wanted to touch it. But yeah. Other countries will help. They don't have a choice. Well, the worrisome part is that some of the comments from Trump is that there might not be as much help as hopefully what they're hoping for. Where was the comments? He was talking about NATO being a paper tiger. He was very upset this morning. Here it is. Without the United States of America, NATO is a paper tiger. They didn't want to join the fight to stop a nuclear-powered Iran. Now that fight is militarily won, with very little danger for them. They complain about high oil prices that they are forced to pay, but don't want to help open the Strait of Hormuz. A simple military maneuver that is a single reason for the high oil prices, so easy for them to do with so little risk. Cowards. And we will remember President Donald J. Trump. I don't know how that opened. So yeah. Are you still holding Micron? Yeah, I'm actually looking to add. The more I read about this, the memory game, the more longer term I think that this trade will be. MD said, who will your next interview be? You want me to say one answer and one answer only, and that's Taylor Lauber. That's funny. Okay. Why boots on the ground? You should have a good explanation for that. What is the explanation? I mean, I'm no military expert, and sometimes whenever I talk on things, people say, "Oh, well, you shouldn't make any comment because you don't know." I don't know. The answer that's the truth, but I think it is a mix of, well, one, oil prices being the top of priority, and then potentially regime change might be another one. Obviously, people have conflicting reasonings and stuff like this, but it would be hard to do regime change from the skies. When did Tanner make general? Yeah. Tom Lee is on. Tom Lee is on where? Oh, he is on. Okay, hold on.
It kind of highlights the U.S. still benefits.
I don't think I should have touched anything.
I'm not going to lie. I don't know, because Iraq had already been partially offline. It's Iraq. We're dealing with a country now. So we're seeing the Dow down 400. Nobody by 4.
Okay, where?
230. Because I don't. Nice work. Thank you. That is up, by the way. One of the means this all.
I guess he just got on.
Give me a question. Sort of offshore storage, literally people using mostly old super tankers to store oil as like a self-storage unit. That has been a huge source of inventory. And one reason oil is not at 130 around the world, because we can take a lot of oil off that side. I think, and we'll talk about this next week at the CERAWeek conference in Houston, I think one of the big themes of this that's going to come out, Tom, is this renewed idea of energy security in the United States, and whether or not these prices and what's happening encourage, entice, coerce, force, whatever word you want to use, the Chevrons and the Exxons of the world to rethink their capital spending plans and invest more in American production.
Absolutely.
What's your take?
I agree. I think, the lessons of the last 6 years have been sovereign security, energy security, cybersecurity, and then onshoring. So I think that these are all amplifying the idea that a lot of what we do in America has to be built and sourced in America as well.
Because at $100 a barrel oil, and it's not the oil company's fault, but their prices now, depends on where they are. Vaguely, most major oil companies are probably pulling oil out of the ground at $35 a barrel.
Yeah.
30 to 40, somewhere in that range. This is huge for their free cash flow and their earnings.
That's right. As long as their hedges roll off and as long as they believe it's sustained.
If they're hedged, that's going to hurt the earnings in the near term.
Correct. Yes. But it's also, I think, a reminder that high oil creates a huge bounty for innovation. And I think that's where America is going to excel. Like, we're going to probably see America energy intensity fall, solutions to cut our energy needs, a lot of demand for technology.
I'm literally putting you entirely on the spot. We got to go. I know producers are literally cursing my name in the back. Do you have a view on Canada at all? Like this, my view is we've got our friends up north, a lot of energy companies there. They would like to sell us more oil. There's talk that maybe the Keystone XL maybe gets revived again. I mean, Canada's got to look a little more attractive.
Yeah.
As an import partner.
That's right. And as well as Latin America. And I think
You've heard about this Venezuela.
Yes, I have, vaguely.
Vaguely.
But yeah, it creates, this is also creating strategic logic for both sides to come together too.
Tom Lee, CIO of Fundstrat. You've been a great partner. Thank you for riding shotgun for a half an hour. Literally just kind of freelances as we got some headquarters. You're staying. He's staying? Does he know that? Do you know that you're staying?
I'm finding out live as
Kareem, does he know that he's staying? Because we're not gonna, I guess we're not letting you leave, Tom.
All right. Okay. Let's see. Guess we have to take over Canada. I guess so. Does that come with a free passport? Because I would love to head south more often whenever the weather gets cold up here. It's like ice raining today. It's still terrible. It's late March. I don't know. Okay, ladies and gentlemen, that is it from me. I will most likely be on during the weekend. I wanted some help, however. I have, here, wait, where is it? Maybe we'll do it on Monday. I got to set up like another thing just in case. I'm really starting to worry about the idea that the channel ends up going down again because of the GTC thing. Now, I ended up setting up a Twitch during that time. No, well, actually, it was up before, but not many people were using it. Little Tannerception for you. But if you could go follow the Twitch Future Investing, it would help a lot just in case if we ever do go down that the show stays on. Yeah, what's up? I don't know how you do that. I guess you can do that over on Twitch. Toronto meetup. Yes, Toronto meetup will be in August. Whenever Marshall comes on. Also, I can't wait. I can't have two YouTube channels, by the way. It doesn't work that way. Like usually whenever you get a copyright strike and stuff like this, that whenever they pull you down, it actually has to do more with you than the channel. And so like if you recreate your channels, I don't know. It doesn't really work that way. It did fully get reversed and like the channel's fine, but I just worry about having some sort of backup. And we do have the Discord. But yeah. Are we still dumping? Let me check. QQQ is down 1.8%. gosh. Just crazy. Okay. Get your girlfriend to make you a channel. It doesn't work that way. If I'm on, like, they will notice that it's me. Where's the Discord? So this is another thing too. So the QR code's right there, but also in my description, I have a links thing. Futureinvesting.pro/links will lead you to everything that is me. I also wanted to get a Facebook thing set up there, but I haven't even promoted that once. And I can't go live until there's 200 followers on it, but I'll actually set that up whenever Marshall comes on. I haven't really done anything with that. And then that's where you can find the Discord link and everything like that. I need to change the whole background. Hopefully we can do some sort of live stream soon. We have 1 week without Marshall, and then he will be joining. First day is Sunday. And then we'll probably do a stream. I'll have him over, and you guys can meet him. And then he's going to help set up the meeting in August. He'll be there as well. You guys are going to love him. He's actually such a lad. Yeah, Marshall's a new hire. Someone who I've known for a long time. And there were some pretty unbelievable people who had reached out to me to help with the channel as well. And if the account ever continues to grow and I need additional help, I honestly think like Prime Future Investing is going to have like 4 people involved on the team, like a dedicated editor, me and Marshall, and then probably something to do with getting more guests on and actually like getting a studio together. But yeah. Crazy, guys. 1.9% right now on the queues as I'm talking about. Is this Marshall in the room? You guys will meet him. He's a dope guy. I've known him for, I don't know, 15 years or something like that. No, maybe not that long. 12 years. But there was just a great opportunity between me and him where he was looking for something new to do, and I needed help. I was just drowning in work and wasn't getting, and I still am. I'm just not getting nearly as much done as what I can actually get done in a day. And yeah, that's going to be great. He's going to essentially be like my Jamie, like the way that the Joe Rogan experience would have. Like he's going to be in the background for the live streams. He's going to help with the Discord and like community moderation, setting up events, announcing the podcasts, editing the videos, getting some shorts out. You know what's funny? Marshall does not invest the way that we invest. He has like SPY and stuff like this, and I'm actually worried about turning him into a little bit of a degen. So he puts his money in like index funds and stuff, but he doesn't invest the way that like I invest. You know what's so weird is like all that stuff that I've never dealt with is like, what is his job title? I know what it is because I had to figure it out before I sent him the offer of employment. But like, how do you think of a job title? Is he 50? No, he's my age. He's 28. Maybe he's 29. I think he might be slightly older than me. But he can tell you about himself. I don't. Well, I mean, I know him very well, but yeah. Assistant? He's not an assistant. Kim Jong-un is love from North Korea. All right. Yeah, young Marshall. No, the actual title is creative producer, which is funny, but that's what his title is. Assistant DGen. Assistant DGen to the general. How did you say his name? I know it's, but that's not the way he spelt it here. I know it's Kim Jong-un, but that's not the way that this guy has his name spelt. Tanner, Marshall, Sky, and Rubble. I don't know that joke. AV Club Nerd. The only reason why I even know what AV Club is from Stranger Things. But yeah, so he'll be joining the team. And yeah, I don't know what all the new changes that I can announce, but there's definitely going to be some new changes. And should hopefully allow me to go live. Well, I don't know if I'm going to change the amount that I'm live. So I'm live at noon. Just so people know, I'm live every day from noon to like 12:50, 12:55, like somewhere in that range, to set up to get ready for the 1 o'clock stream. But that's only for the pro members that are part of the Future Investing Pro thing that I have. And then from 1 to 2:30 is sort of this show. Then I'm going to get out daily videos every day about what's going on in the markets, which is just going to be purely, I'm going to try to focus less on, it's hard because there's things that I obviously like focusing on, but then I see that there is a level of like, okay, well, I need to talk about stuff that you guys actually want to hear, but I want to balance it out with things I want to talk about. But there is a balance there because, like I've spoken about, Shopify and these sort of names just really do not hit. D-Local. Like I actively bring this up and people just drop off. They're like, I don't want to hold some random small name, even though I think it's going to make a lot of money. But I don't want to not talk about those names. But that's where the live streams are really great because you can kind of brush in a little bit of talk about all these different topics and they don't have to be standalone videos. Because if they're standalone videos, they just absolutely bomb. So yeah. What's your cost base on Nvidia? I think right now it's about like $28, something like that. It's been going up a little bit just because obviously I'm buying at this really high rate. But yeah, it's still like one of the greatest investments I've ever made. Okay. 28, holy moly. Well, I mean, dude, it was like literally $5 before, and then I sold off my second biggest position, Tesla, for Nvidia in like 2025 or 24, something like this. And so my cost basis ended up like 5xing. But I ended up building a position during DeepSeek, which was great. But this is what I mean. Like, honestly, guys, I'm not, you can look back on that price and be like, wow, that's such a great price. But do you know the amount of times where I've held for 6 months with no gains or being down a lot? So this whole like talk where people are like freaking out and they're like, oh my gosh, like Nvidia, dead money, blah, blah, blah. It's like, I've been through this so many times where it's like, man, I'm focused on the TAM. I'm focused on what Jensen has to say. the margins that they have, and we stick to that, not focused on the sentiment of other investors. And people tell me all the time, oh, this is like Nvidia is already topped. It's like, okay, but you're never going to see a 10x believing every single pessimistic view that's out there. So you have to hold through those painful periods. You have to be more patient than the other investors in order to find better pricing. And like I literally feel it 100% in my heart. We will find higher highs in Nvidia. I don't know how high that is, but the sun will shine again. And then people are going to even believe me even less whenever Nvidia is at $300 and in my cost basis is once again below 1/10 the current cost. But I will have been holding since 2018. And I hope that I hold it. Like people always say, like, oh, I plan to hold on to my investments for 10 years. How many of you guys have? You know? When Nvidia is in 2028 and I'm still holding, I will have December of 2028, I will have officially been holding on for 10 years, which will be my first position I've ever held that long. I don't know, Tanner, when the just wait bro is consensus, that's not good. Says who? Says you? All the most legendary investors in the world, the Peter Lynch's and the Warren Buffett's and like all of those guys, like that is their sentiment, is relax, calm down. It's time to be patient. You don't always have to be making moves. You're literally going like anti the most famous investors, the most famous investing books of all time. And you're saying, no, you have to be moving. And the best strategy, which is the least followed in the markets, is the people that don't move make the most money. So yeah. What's your oldest position at the moment? Shopify. Also 2018, but slightly earlier. I had sold out of my entire position of a company called Canopy Growth Corporation, but it was called Tweed back then, at like the tail end of 2017, and then was buying all the positions that I have. Well, I don't have them all now. Like Tesla was part of that, Nvidia was part of that, Shopify was part of that. And those companies were mad expensive back then, which is so funny because you say like, oh, wow, you bought all the really cheap names. Like, no, they were expensive back then. Tesla was the most shorted company in the world in 2018. They had more short volume than Apple, and it was an extremely small company. When did you get into SoFi? I think tail end of 2021 or early 2022, something like that. Yeah, if the story's still true, why would you sell? Exactly. But it's witching day, ladies and gentlemen. Tanner, have you sold any stocks around the top and got out of the position before it dumped hard? I'm not sure. I wouldn't even say, like, I can't think of an example of that. Even Canopy Growth Corporation, where, I like 12x that investment, got out. I got out at 48, and then it proceeded to go up to like 70 something, like $72 or something. And then it crashed. And now that company is worth nothing. But not many of the companies that I've held for a long time that I believed in, that I've run, were failing companies. So this is where most of my mistakes have actually come from, is just selling too early. It's like buying Meta or Google or some of these names, or even Nvidia. Like I trimmed a lot of my Nvidia on the way up So because, you know, we had made a lot of money between 2018 and 2021, and AI wasn't really, like, obviously CUDA and all that stuff, and, you know, they were talking about artificial intelligence, but the transformers and everything, the ChatGPT moment hadn't happened, so it wasn't as real as what it felt like today. I had trimmed a lot of those names, and all the mistakes that I've made mostly are from companies that I've sold too early. But I'm not a trader. I'm not looking to buy low and then sell some company at the top, and then it crashes, and then I buy the company that had crashed and then run it up and then sell it at the top. I'm just filling my portfolio with companies that I think will be so much bigger 10 years from now. Like, how do we get in on Meta before it's Meta? How do we get in on, like, some of those names? When was the time to sell JP Morgan? When was the time to sell Visa? When was the time to sell any of these amazing companies? But it's just a completely different strategy. There's a lot of traders, and that's fine. Traders make money. And I think that there's an investors, and I would classify myself as putting myself in the investment class. I want to own companies. I want to be shareholders and owners of businesses that I think are just going to continue to compound. Tanner, what delta and how far out do you sell your covered calls? My covered calls are pretty short dated, 2 weeks, maybe a month sometimes. But my delta is really low. So like 0.1, 0.15, I keep it really, really, really low. And just enjoy a small dividend without having to worry about rolling too often. Almost never. Because I don't do a lot of covered calls near the bottoms either. I usually do them whenever the companies are doing very well. So like the chance that I have to roll is really low. Have you ever held Go Easy? I did hold Go Easy. I'm not holding it now, but I did make some money on Go Easy. But the ticker that I was holding was GSYTO, which is the Toronto exchange version of Go Easy. Okay. Are we going to hit down 2% today? QQQ's at 481. SPY, not soy, is 648, down 1.5%. Wow. Tanner, have you ever panicked? Well, it means panic what? Like panic on individual names? Yeah, of course. And panicked incorrectly? Yes. Panicked I don't think I've ever brought my whole portfolio to cash. Not for a long time. Are we about to find new lows here, down 2? Are we getting to down 2%? Trump administration has made detailed preparations for deploying U.S. ground troops into Iran, per CBS News. Wow, look at this. We're about to be down 2% on the Qs today. Quad witching day. So it has that extra amount of added volatility. Potentially add a lot of selling pressure here. We knew it was going to be bad before we even saw it. Have you ever had trouble sleeping due to one or more holdings? If I did, I can't remember. I'm sure I have with short-term trades and stuff. But not that I can remember. But just said no troops on the ground yesterday. I know that's the worrisome part about this market. It's extremely hard to find out. Okay, ladies and gentlemen, said I was going to stop at 2:30 and then just ended up talking for an extra 30 minutes. Love you guys. Appreciate your time. But yeah, have a great day. Stay calm. Are we about to end the stream at down 2%? Oh, if it goes down 2%, I'm ending the stream. Oh, what if it starts to recover? 1.9? It's literally what, down 1.99%. Get me out of here. We should do that. I should do some like marathon stream where I just go live until the market goes down by 2% in a single day. And if we have a bull run, I just have to stay live for a week. Oh my gosh. Come on. Die! There we go, ladies and gentlemen. Thank you all so much for watching. Hopefully that didn't, I know we're losing money, but we're losing money together. There will be brighter days on the other side of this. These are buying opportunities, in my opinion, for names that can continue to put up. Look at everyone cheering. Bye for now. For everyone that can put up with the pain, it is a buying opportunity. Bye, guys.